Hey, good morning everybody, it's Brian. Today is Thursday, the 30th of July, here for just a quick update this morning. What are we looking at? What are we potentially trading? What's going on in the marketplace? Today's going to be pretty quick because it's US forex session gets started here in about 15 minutes at 8 o'clock Eastern. But then right after that at 8:30 we've got some pretty big reports that are coming out. So there won't be anything to trade or to potentially trade until after we get through that news and find out what the unemployment comes in at, what the GDP is, and at that point we can find some directionality in the market maybe, and then take some intraday trades. So there won't be a forex section today. I think we'll just hit what news is coming up, some commentary on what to expect, and then talk about key levels we'd be looking at in the futures market, and we'll just leave it at that for today. All right, so let's go ahead and get into it. Want to bring up this screen over here, but not that. Let's bring up this. All right, so there's big news coming up today at 8:30 Eastern, 7:30 Central. So this is in Central Time on my screen. So it's 7:30 Central Time, which is where I am. But anyway, we've got some major reports coming out. Advanced GDP is probably the big one. This is this just like yesterday was a potential market catalyst with the FOMC meeting and rate statement and whatnot that came out. Today is another potential catalyst in the marketplace. So yesterday, big rah-rah session. The Fed will continue to do whatever it can do to do what it does. And the market rallied. Today, hard numbers come out about overall health, I think, of what's going on, and cost of goods and services. So this will be interesting. This will be interesting today. Unemployment, if that, again, not making any assumptions about what's going to happen or what could happen. Just know that the market's, got some major news coming out an hour before the bell rings for the U.S. stock market here. This will be pretty impactful to dollar strength, which will ripple through the market in the forex side of things. So following this news, you wait until 8:30 Eastern, 7:30 Central, when the news comes out. Don't worry about what the news says, if it's positive or negative, because just like I said yesterday, and just like I've said every day before, and I'll continue, and I've said for years, and I'll continue to say for years forward, the number on your screen when it comes to this news report doesn't matter as much to what you're going to be doing in the marketplace, because you should have a quantifiable process in the market that says if these things happen with price on your chart, then you take these actions. Because I can't tell you, well, I can tell you it's probably 50-50. News comes out, you've got a big green number, it looks like you should have a positive day in blank, and whatever that might be. Half the time it'll go straight up, half the time it'll go straight down. It's a crapshoot. Everything in this market's a crapshoot. We don't know where it's going to go in the future. All we can do is have a process, have a plan that we can execute, and that plan has to be backed by something that's quantifiable, something that's definitive. If this happens, then this happens. Very definitive steps that we're taking when we lead things, if we're looking at news and trying to interpret what that number means, whether it's highly positive or highly negative or equal to what the forecast was. If we're trying to interpret that, we're adding a huge level of subjectivity to it. And remember, we're not the ones. We're retail traders. We're fleas on the back of this elephant that's running through. We're just the passengers on a train, right? And we're moving along with it. If we're using the train analogy, if we're jumping out in front of the train hoping it's going to stop and trade in the other direction because we heard that, or we saw this news announcement come out and the train should be stopping and reversing right now, we're going to get run over more times than it's going to stop at our nose and move back, right? So just be aware of that. We don't, I mean, everyone wants to be the hero and call the tops and call the bottoms, and I guess that's what all the news is made up of, all these great traders that called the top or called the bottom. But it doesn't happen very often. And what we need to focus on are the things that we can do consistently, which is follow a plan, have a plan, and follow that plan. And there's going to be days and weeks where we don't really have any action, right? This is another one of those days, let's wait and see what the news does, and then see how that affects our trading plan. And then if we get an opportunity to trade, then we take it, all right? So I know I've been on, sorry about the soapbox for that, but I just want to get that out there because today it's exciting to see what happens around the news, and there's a lot of volatility around it, and it's that volatility creates excitement. There's cool things happening in the market, especially if it just suddenly dives off a cliff, which really, based on where we've been sitting, I feel like is coming sooner than later. This is my personal commentary out there on it. Take it what you will. I don't see any way possible this market stays where it is for any length of time. Reality has to hit it at some point. We're effed economically. But anyway, and that's got to come back at some point. I mean, who's going to be buying these goods and services if no one has freaking jobs? So anyway, let's get to it over here and just have a quick look at what that means in the futures market, what we'd be watching for. So for Forex, you're not doing anything. You're sitting on your hands, you're waiting. There'll be opportunity post-news over here. There will be opportunity post-news after this comes out. Not 1 minute post-news though, not 2 minutes post-news. Give it at least 5 to 10 minutes. Let the market chop around and find its direction, and then find those currencies that are actually moving. Right? You're looking for a currency that's being heavily bought versus a currency that's been heavily sold, and then take that trade. Don't try to front run it. Don't do it immediately on the news. You've got too many things working against you when you trade it on the news. Spreads are one of those. It's crazy. Spreads get wild, and they will get wild today. So watch that. Wait for things to normalize. Wait for directions to be found, and then trade the hell out of it. Forex will be a very volatile day with some opportunity. Over to the futures market, though, we have to really watch what we're doing now. Here's the funny thing. We've been talking about 32.18, 32.20 for weeks now. We've been watching this level since really back here at the beginning of July. July 10th, we were talking about 32.18. And it's acted as a huge level of resistance at one point. Resistance. It finally broke through it, and it's become support. And broke through resistance, support. Again, it just keeps coming to this level and bouncing off of it. This is a tough level. There's a lot of buyers being found here at 32.18. Yesterday, following the initial housing report that came out, and then following the FOMC statement and further remarks after that, the market rallied, blew right through this next level up of 32.40, came to about 32.58ish, I think it was. Yeah, 32.57, and then reversed off of that, came right back down to where we started the day yesterday. So this will be this 32.18, 32.20 is our bottom edge. Watching this level, to see what happens if we burst through here on this GDP news, and see how the market reacts to that as it gets going. It could be one of those days of, and we've seen this over and over and over in this market, of it wasn't as bad as we thought. Rally the troops and push this thing in a face-melting rally to 3,300 on the S&P. Or it's the beginning of the end, and they go, holy shit, things are getting real, and they dump it. But I don't know. But Brian, you just said it could go up or it could go down. Yeah, it could go up or it could go down. I don't know which way it's going to go. You don't know which way it's going to go. Nobody out there in TV land and internet land knows which way it's going to go. Half of them are predicting it's going to go back up. Half of them are predicting it's going to go down. And at some point in the day, they're all going to be right. But reality is, no one knows, which is why you've got to have a plan and stick to your plan and trade your plan. And that's everything else that happens around is just noise, right? It's just all this noise, and that's why we have a plan, is to filter out all that noise. That's why we put filters on our chart, is to filter out all the noise, show us the things that are important to us in order to be able to take a trade, and then we trade based on that. So anyway, back to the key level. So we got a key level here at 32.18, 32.20. We've been bouncing off of it this morning. This level's been tested quite a bit here recently. So if it breaks through here and you want to be a counter trend trader, you can look to short it if it breaks through 32.18 and look to take that down from that. That would be a counter trend trade. Again, it's tough. I certainly wouldn't bet the farm on it, and be prepared to be wrong. Be prepared that it might come through here for a few ticks or even maybe a couple of points, and then it could reverse against us. So if you're going to be a counter trend trader, go for it. Absolutely, go for it if you want to do that, but be prepared to be wrong. Have a stop loss. How far against you are you willing to let this go before you just say, hey, that train's not stopping? And that long-term bias, which is on the 4 hour here, the biases I look at are the 4 hour, the 30 minute in order to make my trading decisions, right? The 4 hour bias is still long. It's long. The train is moving in this direction, right? It's slowed down a bit, but it's still moving in this direction. So, do with that what you will. Certainly nothing wrong with taking a counter trend trade, but don't bet the farm on it and be prepared to be wrong, right? So the trading with the trend, looking at the 4 hour bias, excuse me, that's something in my throat. Based on the 4 hour bias and the 30 minute bias, we've got a mixed bias. The 30 minute bias is short again, 4 hour bias is long. So if we're trading for this and we're looking for agreement in these, then just like yesterday and just like many days before this, even before I went on vacation, we don't trade. We say, okay, there's hands, it's a mixed bias. We don't worry about it. We just say, oh, I'm going to sit on my hands. Maybe even better, just shut your trading terminal off so you're not tempted to do something that's outside of your plan. You've got to have a plan before the market begins. Have a plan of what you're going to do. Write it down. Tell it to your spouse, or if you're going to have a spouse, tell it to your dog or your cat. Let them know what you're going to do. Say it out loud. Have a plan that's documented that you're going to follow, and if things don't meet those criteria, then you don't take a trade. I know I keep harping on this, but it's such a basic thing, and it's such a big deal. It's how accounts get blown out. Accounts get blown out by doing things with no plan, or having a plan and then just deviating from it and trading solely on your gut. It'll blow your account out. Absolutely, positively, 100% is gonna happen. So anyway, not to be negative or anything, it's just how it works. You've got to have a plan, a systematic approach to it, and then have a measurable means of entry and measurable means of exit. So anyway, spending way more time than I should on this stuff. So anyway, 4 hour bias long, 30 minute bias short, that tells us don't trade. But if you are looking for a level to trade from, 32.18, 32.20. Great level. And you can look at that and say, hey, if it pulls back here and bounces, you buy it. And if it breaks through it, you sell it. It's definitely the level that's been tested the most. But as far as the system, thing that we've been talking about here for weeks now, the system itself, which is we wait, looking for a pullback, but trading in the directional bias that the market gives us, these are mixed, so we don't do anything. So we've got a mixed bias in the S&P. Technically, we don't trade, but there is a trade idea if you want to watch this 32.20 area, 32.18. Crude, mixed bias here as well. 30-minute bias is short, 4 hour bias is long. So again, with crude, not much to do. This could be, very impactful on crude, the reports that are coming up here in the next half hour or so. So we'll see what happens there. Gold is still a long bias. We pulled back a little bit yesterday after the high. So really overnight trading, we've pulled back and really have come back to where we started the day yesterday again, and just hanging out here at this 1970 area, 1969, 1970 area. So 30-minute bias is long, 4 hour bias is long. That tells us to look for long trading opportunities. What does that look like? Well, it can look like a couple of things. We could say, hey, if we break through 1975, so we could play a break of 1975 and go long on a break of this. We could wait for it to pull back down here to 1965 or even down to 1960, but 1965 is pretty solid on a half-hour level. We can watch for 1965 as a pullback and buy it off of that level. Of course, if our 30-minute bias changes, if we break down here and we close lower, and our shorter term moving average closes below the longer term moving average, that for me that signals a change in the bias, and at that point we would have conflicting bias between the 30-minute and the 4-hour, and we would just again sit on our hands just like we are with the S&P. But if you're looking for trade ideas, we could look at a long bounce off of 1965, or a breakout long over 1975 here. So either of those, if you're just looking for a trade idea, those would be some trade ideas for you. Crude, I wouldn't do anything here. S&P, again, trade idea would be something around this 32.18 area, although we're in a mixed bias, so the best probable scenario there is just to be patient, right? And I've said this before, I'll say it one more time, then I'll wrap up. If it's a really volatile day, you don't have to trade. You can just wait for the market to get its direction, and then jump in. Again, everyone wants to call those tops and bottoms. Everyone wants to be the hero. I got this trade to the absolute tick on the very top, and then bottom fell out. That's a great story. But that story happens 1 out of 100 times. And the story most of the time is I set my entry point in the face of a giant trend, and the train ran me over, right? so just, it's okay to not take an action. Protect your account, because account preservation is job number one. Protect your account, wait for the market to get some direction, and then trade in that direction, right? So last 2 weeks, we've been hanging right here where we are at 32.18, the market, and we come in and we've got this mixed bias between the 4-hour and the 30-minute on the S&P, right? We've got this mixed bias, we don't take a trade. Mixed bias, we don't take a trade. Mixed bias, we don't take a trade. At some point, maybe we get a big move down and the 4-hour finally agrees with the 30-minute, and then we can ride it. Oh my God, I missed all those points that I could have had I, jumped into this 3 days ago. Well, that's I think a very, I don't know the word I'm looking at for short-sighted view there, because keep in mind all the times that you would have gotten run over had you been trying to do that before the market actually turned. We just want to be that bug or that flea on that camel's back, or that elephant's back, and go for that ride. We just need to be part of the ride. We can jump on at any time. We just need to be taking part in the ride. We don't need to be dictating which direction the ride's taking us, because again, we're going to get squashed. We're going to get run over. All right. So I just want to reiterate that, because today will be a volatile day. There's going to be a lot of eyes on this report that's coming up. As the market gets going and digests what this report says, there's going to be a lot of volatility, or could be. I don't know. I say definitively there is, but there could be a lot of volatility. And the reality is we still don't know. No one knows what direction it's going to go. So stick to your plan. Utilize the tools that you have, the filters that you've put on your chart that dictate to you what action you're going to take. Don't let the report number dictate what action you're going to take. Don't let some guy on TV dictate what action you're going to take. You do you based on the filters that you've got here. And if your filters say don't trade, wait a couple of days until the market gives you that opportunity to trade. Remember, we're looking for the very best opportunities. And if we only focus on those best opportunities, that gives us that best expectancy and that best opportunity over the long run to have positive returns, right? If we're swinging at everything, we're going to strike out a lot. And if we strike out too much, everything gets blown. So I know, there it is. That's it for me today. If something stacks up and we get a great trading opportunity and we take it, I'll let you know what that was. Otherwise, we'll just keep plugging along until the market agrees and gives us that opportunity to trade. All right. So that's it. Have a great day. Bye.